All right. Hey, everyone. Let me adjust my microphone here. Okay. Mark here, Mark P. Markets. Thank you for joining me for another Bitcoin video analysis session. I want to welcome you if you're new. Okay, hold on. There we go. You guys should be able to hear me okay. Let me know if you don't. And if you're new here, let me explain to you how this works. So first, I'm going to run through the economic calendar as I usually do, because you need to be aware of what events can shape market movement throughout the week. Then we're going to talk about this Bitcoin chart that you can see here. I'm going to make the chart bigger. And we're going to specifically talk about how to manage the buy signal that I talked about in my TradingView article yesterday that I published. Hopefully you read that. The week before, I put this illustration that you can see on the chart, the little lines that basically show the scenario that I'm mostly anticipating. So this is the second week that scenario is on my chart. And as you can see, the market is agreeing with it. So we're going to talk about that. And then after that, we're going to get into a day trade with the TradeScanner Pro. Each week, I like to illustrate a day trade so that you guys can see how the TradeScanner Pro script for TradingView works. And if you want to try it out, at least you'll have some point of reference and you'll understand how to use it for yourself. There's also videos on my YouTube channel, some tutorials that explain some of these things as well. Okay, so with all that, let's get started. And let me pull my special slide up over here. Okay, so this is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right, so real quick, before I get into it, let me just mention a couple of things. If you're interested in trying the TradeScanner Pro, you can for 14 days. It's free. There's a link in the description. I'll go more over that as we get into the stream, but you can check that out now if you want. Again, 14 days, you can cancel anytime. Second, if you'd like to get signals every week for free, we have the TradeScanner bot, which the TradeScanner Pro is based on the same concept, but the bot sends out an email with a trade idea each week. It sends out one email. So 1 week it's a coin, 1 week it's a stock, 1 week it's a Forex pair. So it rotates each week. You can get that for free. There's a link in the description. Also, if you want to join the community, we have a Discord channel and there's a lot of activity in the free area. I also have some premium channels, which I'm still developing, but there's some stuff there. Check that out. And if you're interested in using an exchange like Bybit or MEXC, and you'd like to support the community at the same time, consider one of the affiliate links in the description. Those are not mine. Those belong to Stian. And he is the guy that's responsible for all of the technology that we are able to use here and benefit from, okay? Which includes the TradeScanner Pro script, which, by the way, he's about to push another update, which I'll talk about soon. But you help him out by opening an account, placing funds in the account, and placing trades, and he gets a small cut. Also, if you'd like to subscribe to TradingView charts, you can save $15. You can use that link in the description as well. Stian also gets a small cut of that. And if you just want to support the community without using these products, there are some wallet addresses there. You can tip Stian because that's who gets the tips if you send a tip. All right, you can tip in Polygon or in Ethereum, and it goes a long way into helping him support the community because he does a lot of work, a lot of extra work that, you know, he's got better things to do. Let's just put it that way. But he really believes in my mission here, and he helps out a lot. So please consider that. All right, next. Let's get into the economic calendar, shall we? And let me say hello to some of my people here. We got Alex from Romania. Hello, Alex. Alex is the moderator in our free channel, by the way. He's the moderator over in the community. Good to see you. All right. We got Isaac. Good to see you. All right, James. Good to see you, James. And we got Lad. We got GLD, NZK. Hey, Christopher. Okay, yeah. Christopher, I'm not doing altcoin analysis in this stream. So I'm going to be scheduling a student meeting this week, and it'll be on YouTube. So if you want to come to that, you can ask me again there. Hey, we got UTXO. He's a bot. I knew it. I knew it. All right, cool. And Stian, there's Stian himself. Good to see you guys. Okay, so now let's talk about the economic calendar, shall we? First things first. We're in July. Can you believe today is July 1st? It's unbelievable. Anyway, so we have tomorrow, which is Tuesday, July 2nd, we have some important things coming out on the calendar tomorrow. We have President Lagarde from the ECU or ECB president, the central bank president, Euro Central Bank, speaking. And we also have Chairman Powell of the Federal Reserve speaking. Now, I don't know what time Powell is speaking. I don't know. You want to double check, but that's important because if he says something unexpected, the markets can move in a dramatic way, and you don't want to be caught on the wrong side of that. Also, going into those type of events, volume can dry up, and it can be, it's not a situation you want to find yourself stuck in, especially if something's going against you. So we have that. Now, on Wednesday, we have ISM Services PMI, I believe. It's a U.S. economic number, not the most important number in the world. We also have ADP employment. No, I'm sorry. I think ADP is on Thursday. Double check me on that. But I know we have ISM Services PMI. We also have President Lagarde speaking again on Wednesday, which can affect Forex pairs, especially Euro crosses. So you want to be aware of it if you're involved in those areas. Also, we have the FOMC meeting minutes that usually comes out at 2 p.m. Eastern time. And again, that could be a market moving event if there are any surprises or something that was overlooked in the meeting minutes. That can affect things like the dollar. It can affect things like the S&P and things like that, perhaps some stocks. So just be aware of it. All right. Then there's the ADP employment report. That is the preliminary non-farm payrolls. It's either Wednesday or Thursday. I think it's Wednesday. All right. But again, that's not the most important number in the world. Just be aware of it. Now, there are other things on the calendar, but these are the things worth mentioning. Now, Thursday is a holiday here in the U.S. All right. It's 4th of July. So it's very inconvenient for the markets. Let's just put it that way, because no one wants to be in their office, let alone being in front of a computer on that day. So obviously the market is going to be closed. But why that's important to know is because the day before, which is Wednesday, is probably going to see volume taper off dramatically. So in these type of environments, typically what happens is you get some kind of initial move of the day to start the day, and that's it. After that, the party is over. So not a good week to be aggressive. Now, let's move along here. I forgot to mention Friday. Friday is non-farm payrolls. So it's strange. You know, we have a day in the middle of the week, a major holiday, followed by Friday, which the market is obviously going to be open. And we're going to have non-farm payrolls, which is probably the most important, next to FOMC meetings, the most important economic event that we see each month. So that comes out at 8:30 a.m. Eastern time. Just be aware of it. So volume. So my point about all this is volume is probably not going to be very supportive or very facilitating as the week goes on. It's probably going to taper off. Now understand, we are now in July. Volume begins to taper off in general. Volume starts to taper off like the first week of May. And it declines until the 3rd or 4th week of August. That's usually the bottom of the volume. This is important because no volume means no momentum. And momentum is what we need for swing trades and day trades, particularly if you're using the Trade Scanner Pro. So it's important to understand that volume does not typically return back to normal until the 2nd week of October. Please keep that in mind. Seasonal volume is very important to be aware of. It's part of context, and it can affect your performance if you're too aggressive or you do things that you shouldn't be doing in this type of environment. So please keep that in mind. Things get harder. Hey, Christos, good to see you. All right. So that's the economic calendar. If you guys have any questions, let me know. But that's that. All right, let's move on to the next thing, shall we? So I'm going to make this chart bigger here. And we're going to talk about my Bitcoin analysis. How many of you read my article on TradingView? Anyone want to tell me? I hope you read this. So as you can see here, I pointed out the double bottom, and we had an inside bar, which occurred on Saturday. Now, the title of today's stream is Managing the New Buy Signal. So people that may be in this, maybe they got long from the inside bar, maybe they got long yesterday after I put this on TradingView, and I explained this idea. Now, when I wrote about it on TradingView, I usually give it like my expectation for the move is not the next day. My expectation is typically the current week or the following week. I usually look 2 weeks out. That's the scope of my analysis horizon. But the market does what it wants, and the move happened in a day. Okay, so the illustration, as you can see on my chart, this is the second week. These lines here, this is the second week. If you go back to my previous week's article, that's where I introduced this scenario. Now, understand something. People look at that and they may be really impressed. Wow, he called. Wow. La, 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 la. People think that that's the whole point of this. No, it's not. Risk is the market doesn't always agree with me. What this illustration is, what it represents, is the process that I use to narrow a range of outcomes, because the market can have numerous outcomes. My goal as an analyst is to narrow that range of outcomes and select one that I think has the greatest probability. That's the analyst part, or the analysis portion, that is separate from the trader part. Make sure you understand. People don't think that there's a separation. They think it's the same thing. Analysis and risk management are not the same thing. Trades are essentially another way of saying risk management. That's risk. You have to think of risk. So my point is this. This was the scenario that I narrowed and I suspected would be the greater probability. And why I thought that was simply for one reason. We were fooling around in this support area. The 60K area is a major support. This level has been on my charts for months, not a couple of days, months. So we shouldn't be surprised when the market revisits a major support level within the context of a broader bullish trend. This trend is still bullish. Even though it peaked in March, this structure that we have been inside of since then is a broad consolidation. So as my students would know, the midterm trend here is range bound. The long-term trend is bullish. The short-term trend was bearish for a little while here, because the short-term trend goes back, a month, a few weeks to a month, something like that, maybe going back 3 months. We could say that this momentum was bearish. This is not the dominant trend. This is just bearish momentum within a broader bullish trend or midterm range. That's all part of context. If you're unable to put those puzzle pieces together, then you will have a hard time with this. So that's what my training program is about. But people have a hard time with that. And I understand, because you're constantly looking at bigger picture information and comparing it to smaller picture information. And from that, you have to assess risk and potential. That's the whole point. So since we formed the double bottom at a major level, and I saw the inside bar, I said, yeah, and we took out the high of the inside bar. When I was writing my article, that had been taken out. The inside bar is at 61,115 or something like that. That was the high of the inside bar over here. And when I was writing the article, we were at like 61.7 or 61.8. That's where we were fooling around at the time that I wrote the article. This thing went to 64. Well, I'm sorry, what was the high here? 63.794 was the high. And I was saying this thing's on its way to 64. Why? It's the next resistance. So if you really think about what I'm talking about here, we're talking about trend and we're talking about levels. Those are your two primary components. That is the most valuable information you can pull from a chart. All these people that tell you otherwise are lying to you, or they just have some other motive. They're usually selling something or whatever. I don't have to get into that rant right now. But my point is, people misuse charts and they misunderstand charts. Charts do not tell you the future. Charts can give you an idea of how to shape your expectations within reason. Because why? Markets trend, which is a fact, and history repeats itself, which is also a fact. The third fact, which makes up the basic tenets of technical analysis, is that price is a discounting mechanism. In other words, price is efficient. That's part of the basic tenets, which addresses the random nature of the market. Markets are mostly random, but they're not always random. So you need to be able to understand it from a very basic and theoretical level to come up with an idea like this, for it to all make sense, and then for it to give you the confidence to take risk. Now, what was the risk for this trade? Now, I don't care what kind of news came out. I don't care why this occurred. I was prepared for it in advance. I was looking for the longs. And people that use TradeScanner Pro, I told them, watch this location. We talked about this a week ago. In fact, if you look at my previous week's stream, we talked about this inside bar, this green one right here, before it was on the chart. Because I was telling my people, be prepared for such a pattern. And when you're using something like the TradeScanner Pro and you put it in counter trend mode, there are numerous opportunities in this location if you understand the basic context. So the inside bar developed, and we'll look at the TradeScanner Pro here in a moment, right? We'll take a look at those smaller time frames, and now here we are. So to answer the question as far as what do you do now? Well, that's a pretty easy question to answer. It's going to depend on what time frame you're on, of course. If you're on this time frame, there's nothing to do on the daily time frame. If you're long, you just sit in this thing because there's no sell signal here, and we're not at resistance yet. Resistance is up here. So it's still got some room. So at this point, if you're in the green, you might as well let it ride. Now, you could trail your stop a bit. Maybe you want to put your stop to break even. One thing I just want to mention is what was the risk on this trade? The risk was very attractive because if I'm not using the TradeScanner Pro and I was going to assess the risk manually, the risk was around here somewhere, which was that double bottom, the second bottom, the low. Okay, so the risk was like what, 59, we'll say 59,850 area, something like that. So from that 61,115 entry, you're looking at what, 2,000 points? So you're risking about 2,000 points on this time frame based on that, and with potential of 4,000 points, something like that, approximately, which gives you 2-to-1 reward risk. That's acceptable. That's attractive. You should be thinking longs in such an area. Now, if you're not long and you're wondering, should I get in now? No, you missed it. Okay, you missed it. This is how much higher risk if you get in now, because again, the risk hasn't changed. It's still 59 whatever. So now you're, instead of taking 2,000 points of risk, you're taking like 3 or maybe more. That's not really attractive, because how much reward is the potential reward is measured at 64. Can it go higher? It can. It can go back to the top of the range. It's possible, but I think it's much less probable. The top of the range is up here, okay, the 70K area. But keep in mind, we have an old support right here. This support is probably going to give this thing a hard time as a resistance if it revisits. That's 66K. Remember these numbers from previous weeks? I've talked about these numbers numerous times. These levels don't change much. So if we do break 64, 66 would be next. But if don't make the mistake of thinking, oh, yeah, it's Bitcoin and my favorite fraud said it's going to 100K, so I'm going to hold on to it. Don't be that guy, because opinions lead to empty accounts. I know people don't want to hear that. No one likes me because I do not talk about all these great rewards and you're going to be rich and I'm driving my Ferrari and all that other nonsense that appeals to the typical trader and investor. I give you reality. People don't like reality. The people that follow me have been following me for a long time because they've understood that markets are not as magical as everyone else seems to make them out to be. So I'm trying to give you some ideas here to shape your expectations based on market information or market structure. Market information is the best information we can use and consume. Everything else outside of that is garbage. And many people have a problem. Basically, they're stuck with like chart porn and they have a chart porn problem. You know, they get all obsessed with these things on charts, or they get all obsessed with news, and it's all complete nonsense and irrelevant. The market structure is what will give you clues as to what the intent is, the hidden intent. And again, a good example is major support level on the bottom of a range is a high probability place for longs. I mean, just look at how many longs came off of this level. I showed this a week ago as well. Look, these were all long opportunities, and they could have been found on smaller time frames. Okay, all of these are long opportunities. Now, what smaller time frames? It could be a 30-minute, it could be an hourly, it could be a 15-minute. In fact, I'm going to show you right now an example. Let me turn the TradeScanner Pro on this chart here. Okay, and as you can see, this is an old trade, right? The lines that you see on this chart, there's a stop loss here. The entry price is over here, right? This was like 60. I forget the price of that. This was 62,907 was the price of that, which was called in May 2nd. May 2nd is when the TradeScanner Pro generated that signal, and it almost went to the take profit, almost at 72,006, whatever, but it double topped and it turned, right? Now, if you were using the trailing stop got you out like over here somewhere. The trailing stop prevented you from giving this whole thing back. That's the whole point of the trailing stop. If I turn the trailing stop on here, this trade will vanish. But this is on this time frame. Keep in mind, the TradeScanner Pro on a daily chart is going to not give you many signals because there aren't many signals available for the way that that thing works. But if I go to a smaller time frame, right? Like if I go to an hourly chart, for example, we're going to see another story here. Now, let me just show you real quick. This is an hourly chart, and I'm going to turn on, I'll explain all this here in a moment. I'm going to turn on the previous trades so we could see previous trades, and I'm going to turn on counter trend mode because that's what we'd be looking for longs around this level, which is a major support. Yes, there are going to be stop outs. There are a couple over here. That's going to happen. But look at this one. That one was decent. This one was decent. This one was very decent. These were counter trend because at the time, the trend on this time frame is bearish. At the moment, there's a short trade that's active because there's a counter trend. All right, you don't take every trade. You have to consider the context. So I'm not going to get into that yet, but that's what we're going to talk about when I get into the TradeScanner portion of the stream. All right, so back into trend mode. Look at trend mode. Trend mode called all these shorts because at the time the momentum was still bearish. Right? So there are going to be some stop outs in here. Look, these two stopped out. So you can't take every single one. You have to use some context. Something like this over here, this area right here, this may have, like this, you may have taken this trade. You may be like, oh yeah, look, it's a resistance, it's a minor resistance, but you have to realize it's minor. It's minor because it's not on the bigger picture. This is not really a notable resistance on the bigger picture. 64K is the resistance, not this level here. So this level is more likely to break. So that's how you're more careful in a situation like this. You're prepared for something that can go wrong quickly. The level is less reliable. So it's about shaping expectations. Does that make sense? So anyway, I'm going to turn this off now, and we're going to go back to the daily chart. So any questions? I mean, as far as trade management goes, for something like this, again, if you are long and you got long from those 61Ks, there's nothing to do but hold. If you're flat, there's nothing to do but wait for the next signal. Perhaps check a smaller time frame. In situations like this, where there's strong momentum, there are going to be plentiful opportunities on smaller time frames. And in fact, that is what I'm going to illustrate when I put the TradeScanner Pro on the smaller time frame. Otherwise, the only other thing to wait for here is test of 64K and possible short. But if you're going to short that, again, keep in mind, you're shorting something that's generally strong. So you have to keep expectations small, like you're working on a day trade time frame. Perhaps you're only looking for a tiny little pullback, something like one red candle. That could be worth a couple of 100 points on a minute time frame. So that's what you'd look for on something like that. But you need a tool to confirm. That is what the whole point of the TradeScanner Pro is. It's a confirmation tool. We'll talk about that in a moment. Let me just see what people are saying here in the chat. So everyone should, but then we're right. Okay, I remember what you said. Okay, early investors will make billions. That's right. That's a great headline. Many people use it. UTXO, the bot. Right. Double top, no big double top. Hey, Ken, I'm not sure what you're talking about there. the double top, well, maybe we get one at 64K. But again, the double top has to show itself before you can actually make any decisions. Like we had a double top up here, and that was somewhat helpful. Like if you were long, you'd be like, okay, and it's turning and there's a double top established, okay, take some profit. But if you're not advanced enough to even recognize that or do that, that's what the trailing stop is for. And the trailing stop is very effective for solving that problem. From Brooklyn, hey, Savi, how are you? You gave 64K within a week, right? Within hours, right? I know. I actually, Savi, I was suggesting 2 weeks, right? My outlook is typically 2 weeks, and it got there fast. Again, Bitcoin does what it wants to do. You know, I can recognize its intent, but what it actually does is up to Bitcoin. But anyway, so hopefully you got a piece of that. So those are the main points that I want to make. Now, people that are feeling perhaps like that you've missed out, that was one of the points that I made in my article. There's no reason to feel like you're missing out. Anyone that makes you feel that way, stop watching them, please, because there's no reason. There are numerous opportunities. Even now, with this structure in place, there are things to do on smaller time frames. And all throughout this consolidation since the peak in March, there have been numerous opportunities, both long and short. But those opportunities are going to exist on smaller time frames. It could be 5-minute charts, it could be 15, it could be 30. It's going to depend on the time frame that you're most interested in. But the point is, there are numerous opportunities, and you do not need to feel like you're ever missing out. Even if Bitcoin from here, let's just say it goes in a straight line and it works its way all the way up here and gets everyone excited, right? Let's just say it does something stupid like that, which can happen. Even in that scenario, a move up to here, there will be plenty of opportunities to get involved and even to take small bites out. The higher it goes, the smaller the bites you want to take because your risk increases on the long side. Make sense? Okay, so that's pretty much what I want to say about this. Miss is not losing money. Right, exactly, Savi. Missing out. People have this idea, or it's basically planted in their mind, that when you miss out, you're losing money. That is such a nonsensical thing to think. You're not losing anything. You're just watching a chart move. Your account is not shrinking. You have no risk. Risk is the key thing. When you have a position on, you have risk. So the focus should be risk, not what you're missing, but what you're potentially losing, because what you're potentially losing is meaning when it goes against you because you're wrong. That's the problem. And people, they usually lose their mind when it goes up to here and like, I can't take this anymore. It's going to break out. And you buy the worst possible price, because that's when you give in to the fear, and then you buy the worst possible price and you assume the most risk. That's a very common beginner mistake. That's something you want to avoid. So to avoid that, you need some kind of decision-making process, whether it's your own or someone else's that you learn. That is one of the points of the TradeScanner Pro as well. It simplifies the decision-making process. You still have to do some work. You should be able to recognize trend and support and resistance on your time frame. That doesn't take a long time to learn. If you spend time, it could take a month, maybe 2 months. It's not this thing that you have to spend years doing. Because why? The TradeScanner Pro takes the hard part off your plate. The hard part is confirming and knowing where to get out, whether you're wrong or whether you're right, where to get out. The TradeScanner Pro answers that for you. People that don't see the value in that, I can't help you. Seriously, quit this game now and go sell shoes, because you're never going to get anywhere in this game if you can't see the value of that. It takes years off of your learning curve. So I just, Steen sent me a picture recently of someone else's. They were selling training and they were selling mentoring. Okay, the prices that they were charging were outrageous. I mean, the highest for the full package, I think it was like $5,000. Who pays that? I'd like to know. For me, getting $30 from people is like pulling teeth. And I have a very valuable tool that actually can help pay for itself if you use it correctly. It's possible. This other stuff, mentoring for $5,000, really? Man, I'd love to know who pays that. Anyway, and their monthly stuff, $200 something a month. It's ridiculous. I don't know who's paying that. But anyway, just wanted to mention that. So again, my point here, I'm not here to like shame people or make people feel bad. I just want you to understand what reality is. And I want you to understand how to navigate these markets in a way that's beneficial to you so that you can recognize these things for yourself. Because when it comes to making a decision, it doesn't matter what news you look at. It doesn't matter what anyone tells you. You still have to have the confidence to make that decision. And the only way to do that is to arrive at your own conclusion. You must be able to think independently. I cannot emphasize that enough. Sure, you want to learn things from people, but you have to be able to recognize things and think independently. If you do not, you will then, by voluntarily or involuntarily, you will be part of the herd mentality. You will react with your greed and your fear, and you will fail, because typically what happens is you buy at the top, you sell at the bottom. That's standard herd mentality behavior, and you react that way because that's standard human behavior. And that's something you have to unplug from. It's very hard to do. It took me decades to do that, at least over 1 decade. It took me to do that, to really unplug and be a contrarian and recognize the fault in the human behavior, which is actually an opportunity for the trader. Now, understand, I operate on very small time frames. So that's where that thinking is very important, because really, you don't have time to think. You have to recognize things and you have to act. Whether you're right or wrong, you have to act. Otherwise, you wipe out your account. So anyway, okay. So let's talk about this. All right, any questions about that? That's my rant. I want to get into the TradeScanner Pro. So we're pretty much clear on what to do if you're working on this time frame. There's not much to do. Let this thing ride, see how far it goes. Maybe it blows through 64K. If you get a sell signal in the next couple of days, then you should probably move your stop to break even, or at least take your profit. Do something if you're in the bigger picture. Now, let's switch up to the smaller picture. I'm going to, first thing I'm going to do is I'm going to change this chart, because this is the spot market. So what I'm going to do is I'm going to go to Bitcoin Perp. Right? Bitcoin Perp is the perpetual futures chart. I like to use the perpetual futures because it's good for 1 minute examples. Now, let me explain something. We're going to switch this over to MEXC, and we're going to change the time frame on this to hourly, 1 hour. Now, with that being said, we're going to switch the TradeScanner Pro on, right? It's on the hourly. So how do I know the TradeScanner Pro is on? You can see this little label up here that says trend is bullish. That's your trend for this time frame. Now, very quickly, let me explain how TradeScanner Pro works. So TradeScanner Pro is based on my TradeScanner concept, which is what the bot is based on that sends out emails. It's a trend following momentum reversal system. It works in 3 steps. First, it identifies the trend, like I just pointed out. The second thing it does, so let's say the trend is bullish. It says trend is bullish. The second thing it does is it looks for a pullback in that trend. So let's say it pulls back. And once it identifies the pullback, it looks for changes in momentum at that point. It's evaluating the pullback for changes in momentum. Once the changes occur, it then looks for this movement, or confirming that momentum is now reversing back to the side of the dominant trend. When all of this criteria is met, it then generates a trade suggestion in the form of orders, right? Stop loss, an entry, which is typically at that point, not at the bottom of the move, because it needs confirmation, and a take profit. The take profit, oops, wrong button. The take profit is typically 1.5 times the risk. That's what it's set at by default. You can see that right here. It says 1.5 on the TradeScanner Pro. That's how you know you have it on your chart. It says 1.5. That's 1.5 times the risk. So whatever the risk is, which the market defines, not you, the market comes up with this. That's the risk. It takes that, multiplies it by 1.5, and then it gives you this. That's how the TradeScanner Pro works in trend mode. There's something called counter trend mode. Counter trend mode, let me erase all this. Counter trend mode looks for a change in momentum, but it ignores the trend. So it looks for this. If the trend is bullish, it looks for the change in momentum that is against the trend. And that could be very, very valuable when you are looking for reversals. Now, like I said in my previous stream, and I wrote in previous articles, there are 3 types of trades, or 3 types of signals, for the TradeScanner Pro. There are trend following or momentum continuation signals. There are momentum reversal signals, and then there are random signals. Momentum continuation and reversal can be a random signal. Markets are highly random. So it is our goal to isolate and try to avoid random signals. Sometimes we can't really do that. But the point is, going into a trade, you have to understand what you're looking for. If I ask you, well, what's your goal? Like, what's your purpose? And you say, well, I'm just here to make money. That's not adequate. You have to have a specific purpose or a specific reason or expectation. So you're either looking for reversals or you're looking for momentum continuation. Now, here's a quick test. Those of you here that a week ago, don't answer. Let someone new answer if they can. Here's a quick test. Which type of signal, reversal or continuation, do you think has a greater chance of being random? Which signal do you think, which type of signal do you think has a greater chance of being random? Momentum continuation or momentum reversal? Let's see what people have to say. Random makes money to a broker. That's true. That's true. This game that we play is actually considered a minus sum game. What that means is both parties, the buyer and the seller, lose money, but the broker always makes money. That's called a minus sum game because there's a cost to everything that we do. The losing trader loses a little bit more money. The winning trader wins a little bit less money, and the broker makes it on both sides. Best to be the broker. Does TradeScanner Pro work on mobile version of TradingView? Savi, I don't know. That's a good question. It should. I don't use it on mobile, but I would imagine it should. So that may be a good question for Stian. Stian, does it work on the mobile? So anyone want to answer that question? Which type of signal do you think is more random? And then we're going to get into looking for trades here while this thing's pulling back a bit. So while you guys are answering that, let's now start to formulate our concept for the trade. Yes, it works on mobile version. Cool. Thank you, Stian. Stian just answered that question. The TradeScanner Pro works on mobile version, Stian says. Oh, wrong thing. Depends on the market sentiment. Well, no, the answer to the question is the momentum continuation. The reason is the momentum reversal has a specific reference point, and that is usually a level, right? Like the 60K on Bitcoin, that was a level that we can anticipate. Price action there is less likely to be random because we can anticipate history repeating itself, or someone, whoever's buying there, we can anticipate that they will buy again because they've bought there for so long, so many times. So it's less random, where momentum continuation can happen anywhere. And like a situation like this could be a momentum continuation type of situation when you get a large candle, right? Whether it's bullish or bearish, because that momentum is pretty strong. And if we get a signal in the middle of this, let's say the next candle opens and we get a signal because it pops up a bit like it's doing right now. It's giving us a little tail. On a small time frame, this is going to be a significant pop-up. And this can turn into a momentum continuation. The momentum in this case is bearish because the hourly candle is bearish. Make sense? Okay. Okay. All right. So, all right. No problem. So that's the explanation there. Now, what I want to do here is I want to get into the thought process that you should be practicing when you're using the TradeScanner Pro. You don't just turn this thing on. A common mistake that I keep seeing is people get this thing, They think it's going to be the magic money machine, and they trade every signal. So a signal pops up, hey, signal, hey, I'm going to be rich, and they buy it, and then they get stopped out a couple of times. And then I see a cancellation go off, and I'm like, this guy was only on this thing for a couple of hours. Never even gave it a chance. You need to give this thing at least a week or two, right? So that's the whole point of these streams. I want you to know how to use the tool properly. So this is what you have to do, right? You have to go into it with a purpose. And that's where I'm beginning here. Notice I'm on the hourly chart. I'm planning to trade the 1 minute. So what am I doing on this hourly chart? What is the point of being here? I'm trying to gather some clues, right? I'm starting with a larger time frame. Now, let me just mention a couple of things. When you're dealing with a 1 minute chart, it's a very hard time frame to trade. I'm illustrating it here because we get to see action, and we get to see the TradeScanner Pro in action. If I'm going to work on a 15-minute, like I suggest to beginners, we'll never see trades on here. The best thing to do is use your notifications from TradingView to get the signal from that, so you don't have to wait around, because a 15-minute chart can take hours to generate a signal. A 5-minute chart can take a long time to generate a signal. But 1 minute, there's signals all over the place. But the smaller the time frame, the more random. So I have to be very particular about what I'm trying to do to minimize that random nature, right? So that brings me to the hourly. So keep in mind, my intent here is to work on a 1 minute chart. I'm looking for day trades. Now, I need to gather context. That's what I'm doing here. So if you're going to work on a 15-minute, you would use the 4 hour, or you would use the daily chart for context. But I'm using a 1 hour because I intend to work on the 1 minute. Make sense? Let me know if you have questions about that. So on my 1 hour chart, I'm trying to gather some information. First, the general trend I could see here is bullish. Higher lows, higher highs. And if I'm not sure about that, the TradeScanner tells me right there, trend is bullish. Now, in the middle of that bullish trend, I see some levels, right? I see over here, there's like an old resistance, which is now looks like a support. I have a support right here, and I have a resistance right here. Those are reversal points. I can use fibs as well, but I'm not going to do that here. I'm just going to use these historical points because there was previous price action at these points, right? So right now at this moment, this is my support and this is my resistance for my 1 minute time frame. That's it. You don't need to go out and find 10 supports or 10 resistance levels. You just need the closest ones, because they're going to be the most in play. They may break randomly. So I'm not going to sit here and say they have a 100% chance of being reliable. They can break. But these are going to be my points that I'm looking for reversals, which means chances are I'm going to have to be in counter trend mode, right? So we'll get into the modes here in a moment. So I'm gathering context. So as far as 1 minute trades go, my hourly is giving me this bearish momentum. Do I have any minor supports in here? Yes, there's a little minor support level right there. That's minor. Why is it minor? Because it hasn't spent a lot of time recently fooling around here. I see a little touch there. I see a little touch over here, right? Broke over here, but I see we touched here again and we're trying to hold it. That's a minor support. That might be important for a day trade. So I'm going to keep that in mind, but I know it's minor, which means it's really unreliable. But if I see a signal there, I'll be open to it, right? But it's not going to be reliable. Please keep that in mind. So I'm going to lean more toward momentum continuation because I don't have a major level below me. And this is a pretty solid candle. What time is it? We have this candle is about to close at 4 o'clock. So that's pretty solid momentum for this time frame. I'm going to go with momentum continuation, right? When I go to my 1 minute. So that's my context. This is an important first step before I take trade signals. Now, I'm going to now minimize this chart or reduce this chart by doing this. And on this other side over here, I'm going to do this. And this here is my 1 minute time frame. And as you can see, these lines are the levels that I drew from my hourly, right? So I have some point of reference. Now, I thought I put the TradeScanner Pro on. I never saved. Okay, no problem. So I'm going to do it here on this chart, right? So I'm going to go to my 1 minute over here, which is the same thing. I just like to show two charts, but in this case, what I'll do is I'm going to change this one to the hourly, so we can see two charts, right? Hold on. I want to refresh that. Okay, so we got the hourly, and now I'm going to my 1 minute. This is my 1 minute. This has a Trade Scanner Pro on it. This is not the most recent update of the Trade Scanner Pro has the change in trailing stop speed. We could change that now, but Stian just put together the next update. He hasn't sent it to me yet, but he rearranged the control panel. So let me just talk about the control panel real quick before we get into the trade. This is the setup, the settings panel. He changed it. It's now grouped and organized more, I guess, more conveniently. But you can see a couple of things here. We have show previous trades, which you could turn on and off, and that shows previous trades. It's pretty self-explanatory. You have reward ratio. This is where you change your reward risk ratio. It's set to 1.5, which means 1.5 to 1. You can change this to 2 to 1. You can change this to 1 to 1. You would change that based on your expectations if you were more advanced. If you're a beginner, don't worry about it. You don't have to change it. Heads up, what that does is that paints candles orange. And what that lets us know is that a potential trade signal may be appearing in the next few candles. So on a 1 minute, if I see orange candles developing, that means in the next few minutes, a signal is likely to develop. So it gives me a heads up. Also, for very aggressive traders, and I've showed many examples of that, sometimes you can start an early position if you're very confident about the level using the heads up. You can start getting in early. And I try to do that in my examples. All right, we'll talk about that more, but that's what that is. It's very valuable. We have the trailing stop, which is self-explanatory. That puts a trailing stop on your chart, and it trails the market. The whole point of the trailing stop is not only to maximize your profit or keep you in a winner longer, but it also reduces your risk. Sometimes you may be in a trade for a little while, but the market's not really going anywhere, and the trailing stop will start to rise and cut your stop loss. So you have to respect these, of course, because you still have to press the buttons to get out, or you have to place that order. The script gives you suggestions. So the stop loss, as I will show you, I will illustrate, reduces your risk constantly. That's the whole point of it. And then there's counter trend. Counter trend is the most important setting on this settings panel. This, as you notice, I keep toggling it, right? And notice I'm getting all these orange candles, right? Like right off the support level. That's because it's looking for the counter trend heads up. But these are counter trend because the trend is bearish on the 1 minute chart. Okay. So counter trend, that's you advanced traders. You're going to be switching this a lot because this is what you're going to use for reversals. I cannot emphasize that enough. So pay attention to that when you get to your settings panel. So in this case, I may keep counter trend on. What time is it? Okay. I'm going to wait until after 4 o'clock because typically at the market close, 4 o'clock Eastern time, there's usually some type of gyration in Bitcoin, and I don't want to get caught on the wrong side of that. So right now, let's point out what's going on. I'm interested generally in momentum continuation, right? Like I said before, but there is a minor level here. I may take that for illustration purposes. We'll see. I have a warning, which means a signal may appear in the next few candles. Now, I'm not going to take this early because we're going right into 4 o'clock. Time of day is part of context. Now, if you're a beginner, I wouldn't expect you to know that, but you'll realize that over time. It's every day it's the same story. Certain times of day, there are certain types of reactions. So since I know 4 o'clock is one of those inflection points, I'm going to wait till after 4 o'clock. There's a signal. Look at that, right? So the warning worked there. So we have 2 minutes till 4 o'clock. I'm still going to wait. This signal can get stopped out. So I'm not going to take anything yet. Let's see what happens at 4 o'clock. But normally, if 4 o'clock was behind us, I would be taking the signal. I'd be looking to take this. All right. Now notice all of these counter trend signals are stopped out. These are stopped out. You realize that. 3 stop outs. Okay. So this momentum is pretty bearish. And look at this short that was called up here. Nice. Right. That was counter trend at the time. Keep in mind, I'm in counter trend mode. So here's my plan. After 4 o'clock, because of a time of day, if we're still floating around above, or we're still fooling around this entry price, I will start buying. I'll buy 1, maybe 2. We'll see. Now, if you notice here, the trade scanner has given me my stop loss, my entry, right, which I'm not taking yet, and my take profit, which is up here. The take profit is very important because That is based on the price action of this particular time frame. This is what keeps you out of trouble, so that you're not sitting there expecting 1,000-point move. This thing, based on this, 63,309 is where you should be taking profit on your 1 minute, not 65K. So this keeps your expectations in line and gives you a nice visual reference. Now, my trailing stop is on and I'm in counter trend mode. We don't see the trailing stop yet because it takes some time for it to appear, right? The market has to move in your favor for a little while, or at least move around without going to the stop. Man, this thing's going straight to that was nice. Too bad I wasn't in that one, right? We're going right into 4 o'clock. We never even got the trailing stop, never even had a chance to appear. That's going to happen sometimes. So the trade vanished because it went to the take profit and the trailing stop wasn't present yet. So the trade is now closed. Okay, see how that worked? That will happen sometimes. If the trailing stop was present, then this trade still would have been open. And it's giving it back anyway. This is the whole 4 o'clock gyration thing I was talking about. It's now 4 o'clock. So you see, we had that little jump, whatever, 4 o'clock action, and now we're going back to normal. So let's see if I can get another signal based on this minor support. Now, you see, every time I point to this, notice on my hourly chart, right? Notice on my hourly chart, that's where I am on the hourly chart. That's why I'm keeping that up so you can see. It's nice to have both charts up so you have kind of an idea of where you are in the bigger picture while you're working with the smaller picture at the same time. Understand, as you get more advanced, you'll be jumping around time frames. In the beginning, I suggest working on one time frame. And if you're new, I suggest that to be like a 15-minute. Or if you want a little bit more signals, you work on a 5-minute. But you need a larger time frame because smaller time frames have lots of signals, and you won't know how to filter them. And since you're going to be anxious, you're going to take a lot of signals that are going to stop you out. Another big suggestion, if you're a beginner, is you want to paper trade, not use real money. I'm going to paper trade my example here. All right, so we're all set. I know what I'm looking for. I have my purpose, and I'm prepared for a signal. All right, I don't have anything to do at this moment because we don't have any heads up. We don't have anything. Now, should I go with the trend continuation like I was talking about earlier? Let's take counter trend off, and let's see. Is there any signal here? Do I have any warnings? Nothing. There's nothing here. Now, if I work on a sub 1 minute time frame, I'm sure I can find something like up here. Like if I go to a 15-second chart, I would not recommend this. But, oh, look, there's a signal in play. This is a 15-second chart. The take profit and the stop are going to be based on 15-second price action, which means they're going to be tighter than a 1 minute. Also, you're going to get stopped out a lot more on such a small time frame. Okay, back to the 1 minute. So, makes sense so far? Let me know if you guys have questions. So I'm waiting. Now, while I'm waiting, I wanted to point out something else. When you're working with these in the beginning, like I said, you want to work on paper and you want to give this thing a chance, right? You're going to get stopped out sometimes, and you want to avoid getting stopped out like all 3 times here, for example. Okay, this one here wasn't a stop out, obviously. This one was a nice little take profit. Now, something I want you to understand. When you lose, you're losing whatever the market defined as the risk. Let's say $100. Let's just say that's what it was. But when you win and it goes to the take profit, you're making $150. That's 1.5 to 1 reward risk ratio. So it gives you a little bit, it puts you a little bit ahead. Now, here's the thing. Here's where money comes in. With the trailing stop, if you catch a winner and you're able to ride that winner and it goes beyond 1.5 to 1, that is where you start making money. Because when you lose $100, but when you win, now you may win 200. You may win 300. It's up to the market. It's random. So in a way, you can say that this tool helps to put the random nature of the market in your favor. It may run 5 to 1. If you capture a move like that over time, right? Not every trade is going to be like that. But if you're capturing more than 1.5 to 1 over time, your average reward risk ratio is going to be greater than 1.5 to 1. So if you're averaging 2 to 1 over time, you should be seeing your account grow, even though you will have losing trades. Because when you win more than when you lose. Now, another technique, which again is more advanced, but I like to show it, is when you win on 2 contracts, but when you lose on 1. So that makes your loss small and your winner bigger. That's how you get ahead over time. People don't talk about this stuff, but that's the essence of the day trader mentality. And that's what I'm illustrating here. This is going to be harder to do as a swing trader. You can apply the same concepts, but you have to have a lot more patience and you have to let a lot more time go by and your positions have to be a lot smaller. Okay? And investing is a completely separate animal. So I'm not covering investing here. Can you use a trade scanner for investing? You can, but you're not going to have many signals. You may have a couple, you may have 1 or 2 signals per month if you're working on such a time frame. And your positions are going to have to be small. But in situations like that, that's where you're dollar cost averaging and you build positions and you're managing risk in that way. That's beyond the scope of this stream. But I just wanted to mention it. All right, this thing is not cooperating. I'm not getting any signals here. Okay, so this is counter trend mode. Let's see if I'm going to go into trend mode. Like I said, you're going to be switching a lot. Now, one thing, we got nothing here either. One thing that I want to mention, let's go back to counter trend, is one of the things we're working on right now. It's going to take some time, but for more advanced and more active traders, we're actually going to have a way where you can scan multiple time frames in multiple markets so you can spot these signals. Let's say something was occurring on a 5-minute right now. I'm not watching a 5-minute. What if something's occurring on a 15-minute? What if something's on a 4-hour? You'll be able to spot all of that as it happens without having to jump around the charts. That's going to be an extremely valuable extension when we have that. It's not available yet, but I just wanted to mention it. We're working on it. The more recent one, the one that's going to come out sooner, is support and resistance. We're actually going to have an extension that will draw these lines for you, which again, it's a great tool for beginners. So you don't have to worry about going through this step of identifying all the levels in advance. The script will do that for you. We're working on that. All right, just wanted to mention it. So while we wait for something here, maybe let me turn this off. Maybe I'm getting a signal. Oh, look, I got a warning. Okay, and that's with the trend. I think I'll give that a try. So let's turn on my trade panel. I have my order book here. You don't have to use it in this format. TradingView also has a way to place the trades on the chart. There's like a little buy and sell button that usually appears up here. Now we have the warning. So I'm going to sell 1 contract. Now keep in mind, so I'm going with the trend, or with the momentum. Keep in mind, there's a greater chance that this trade can be random, like I said before, because it's a momentum continuation. It's not a reversal. There's no particular level where I am over here, right? Now, I got the warning, which means a signal is likely to appear very soon. If I get the signal, I'm going to short my second contract. I shorted 1 to try to get an early entry, right? And if I'm wrong, I'm going to take a loss on the 1. Happens a lot. It's aggressive what I'm doing. This is not the proper way, especially if you're a beginner. This is not something I suggest, because there'll be many times when you get the warning and the next candle will look like this. And that's not what you want to see. Okay, that can happen. So you want to wait for the signal. But I want to show you a technique that's advanced where you start a little early and then you add to it when the signal appears, right? That's my plan here. So we should be getting the signal probably on the close of this candle. If not this one, the next one, because I have the heads up. That's how I know that. So we'll see how that goes. Now, while we're waiting for that, if you're interested in the 14-day free trial, what I'm going to do here is I'm going to put the link in the channel. All right. Hopefully I type it correctly this time, you guys. So TSCPRO. This is the link. I put it in the chat. It's also in the description. I'm going to put it up here on the screen. Okay. If you go to that link, that will take you to this page right here. This is my website, and it'll take you to this page. It explains how the TradeScanner Pro works. tells you a little bit about me, and then it takes you over here. This is where you can sign up for your 14-day free trial. Now, keep in mind, you can cancel anytime. It's very easy to cancel. You can just log into your membership dashboard and cancel from there, or you could log into PayPal or whatever and cancel from there. It's very easy to do. I've never had anyone have a problem canceling. As long as you cancel within the 14 days, there's no payment. But if you wait till day 15, there will be a payment, and I'm not going to refund the money. Okay, so please be responsible with that. I want to see the signal pop up. So it'll take you to that page. The signal will probably appear on the close of this. And we'll go back to the page there in a moment. I want to short my second contract. How much time do we got here? All right, we got about a little less than 15 seconds on a 1 minute. All right, and then I'll short the second one. So you can go to that page, right? And I want to show you the form that you fill out. There's a signal. All right, so I was prepared for that. So I got my stop, I got my take profit. Maybe it goes straight to the stop. I don't know. Let's see what happens. But I just shorted my second contract. First one on the warning, second one on the entry price. I can even short a third one if we fool around inside this risk area and then we go back through the entry price. Sometimes that happens. We'll see. Anyway, so while we're waiting now, it takes you here. You can pay yearly or you can pay monthly. The yearly is $22.50 per month. It comes out to $270 for the year. You pay in advance, or you can pay $30 a month, which costs you a little bit more per year, but you pay per month. Now, if you can't afford these prices are too high, I suggest you cancel Netflix, because Netflix does nothing for you and it will never pay for itself in the future, where TradeScanner Pro can potentially pay for itself if you use it correctly, right? Because these prices are low. These are introductory prices. They are going to rise. Now, when you press on this subscribe over here, it takes you to this page right here. It's going to take you to the order form. And in the order form, you simply fill it out and make sure that you put the TradingView username right here. Make sure you do that, and then you'll get your invite. Now, keep in mind, the invite can take up to 1 hour to receive. It's automated now. So if you sign up at 5 p.m., most likely you won't see your invite until 6 p.m. Does that make sense? Okay. But if you sign up at like 5:55, then it'll only take 5 minutes for you to get your invite. So please keep that in mind. Don't send me 10 emails asking me where the invite is. All right. Well, Netflix, the documentary. There's documentaries, right? But let me ask you this: is a documentary going to help you pay for it? No. I've watched plenty of documentaries too. They're a waste of time. I mean, well, if you like to be educated or whatever and you find it entertaining, but I'll tell you, no documentary has helped me make any money. So just saying, that's my anti-Netflix rant. But you know what? If you get good, and it's not hard. The things that you have to learn to make TradeScanner Pro work for you, it's not hard. You just have to learn context, trend, and levels. Those are really the only things. If you're going to learn anything, that's all you have to learn. The TradeScanner takes everything else off your hands. You don't have to worry about confirmation. That's what's going on over here. This thing confirmed momentum turning, and now we'll see if it works. Okay, because this is a random time of day, so there's a good chance this is a random trade. We'll see. But the point is, it takes all that work off your hands, which means it reduces your learning curve to a very short period of time, because now you're just learning trend, you're learning levels, the two most important components that you should know anyway, whether you use a trade scanner or not. Okay, and then the trade scanner tells you where to get out. It shows you the risk. It shows you what your expectations should be. It shapes your expectations based on market intent, not what you think or feel or what someone else tells you to think or feel. Make sense? So just wanted to mention those things. So like I said, if you sign up for it, please give it an hour at least, and you'll get your invite, and then you're good to go. Plus, there's the welcome email has a couple of videos that you can watch that review this sort of stuff that I'm going over here anyway, because I want you to be prepared, and I want you to be able to use TradeScanner Pro. And you know what? If you make money with it, then you could subscribe to Netflix and waste your money and your time. All right? Because the TradeScanner Pro is helping you. Now, of course, there's no guarantee that this thing will make you money, right? There's never a guarantee. But if you use it properly, it can at least help you Control your risk effectively. That's one of the key things that a lot of people have a hard time appreciating, because they don't think of this game as a game of risk. They think of this game as a game of, this is my personal ATM machine and I'm going to be buying a Ferrari tomorrow. That is how people come to this market. We're all hooked usually for the same reasons. We all come to this with the same misconceptions, right? Greed brings us here. Look, I was the same way 25 years ago. When I came to this game, I had no clue what was going on. And things were wild back then. I mean, when I started out, it was very easy to make money in those days compared to today. And back then, I had no idea even how I made money. I could tell you what the buttons I was pressing, but I had no idea why I was able to make money. I can tell you now the reasons, but back then I had no clue. The point is, I came to the game for the same reason. I thought, well, Wall Street is a place where you go and just you make money. That's what you do there. It's part of the game. It's the job of making money, right? That's what I thought. It's not the case at all. Especially today, this is a game of deception and wealth transfer. Markets are not here for your benefit. As retail traders, our purpose in this game is to make others rich. That is what we do, especially if you're ignorant. So like in my article I wrote, the market is a mechanism of transfer for those who have material knowledge from those who think they have material knowledge. Material knowledge is something that gives you some type of advantage in the market. One form of material knowledge is inside information. So for example, like Nancy Pelosi, if you have her information, you will make money in the market, because she has an advantage over everyone because she has inside information. Of course, if you get caught, you'll go to jail. She doesn't go to jail, but you will. So that's a form of material information, but that's not the only form, right? There is knowledge of markets, and if you understand markets on an intimate level, you can derive an advantage, even if it's temporary. Part of that is what the TradeScanner Pro is made for. It doesn't give you a statistical advantage per se, but it helps you derive an advantage if used in the right context. Okay, so it's not perfect. The next question that I often get, this trade isn't working, by the way, but let's see what happens. The next question that I usually get is, what is the win rate? And there is no win rate when you are still placing the orders. The win rate is whatever you generate. That's the win rate. So, because you're going to make mistakes, you're not going to follow things exactly. So the win rate is yours. The win rate question is most appropriate when a bot trades for you, because the bot is going to do things by the book. It's going to follow its instructions. Whatever that win rate is, that's the win rate. So I argue that the TradeScanner Pro by default has a 50% win rate, which that sucks. That's random, isn't it? Yes, but if you win more than what you lose, meaning a positive reward risk ratio, that's what puts you ahead in a random environment. Understand that. People will try to hook you with nonsense win rates. They'll say, oh, out of 10 trades, 9 of them were winners. So you get 90% win rate. And don't worry, it's only $500 to subscribe to my thing for a 90% win rate. And you're thinking, wow, 9 trades out of 10. Yeah, right. Okay. But usually they cherry pick the results, number one. Number two, one thing you may not realize about high win rate systems, unless it's an algo that's managing the system, typically a high win rate system means small profit, big risk, right? So you have 9 profits of 1 point, and then trade number 10, you lose 10 points, which puts you back to break even or -1. Plus the cost involved, you're negative, right? That's typically a high win rate system, typically. It's better than 40-60, and that's still good. Actually, that's true. You bring up a good point, lad. You can make money if you're only right 40% of the time. But just like 50-50, what gets you the positive result is you have a 3-to-1 reward risk, right? The greater reward, you're making more money when you win compared to what you lose. That's the magic behind, if there's magic, that's the magic behind the TradeScanner Pro, because of the trailing stop, which we don't see right here. How come the trailing stop should be out by now? Where is it? Maybe I should turn it on and off. Oh, if the trailing stop keeps you in your winner longer and you capture 5-1 when otherwise you would not have, that's what puts you ahead. Meanwhile, when you lose 1, not 5. Does that make sense? So that's the whole purpose of this thing. That's what it's meant to do. This is stopping out. So I'm going to get out now. All right. I was better off going with the reversal, but the thing is, this wasn't a level for a reversal. So I took a trade on the side of the general trend. Notice here that the trend has changed to bullish. And well, it hasn't. I got out of the trade, but it's still not stopped out yet. It'll probably stop out in the next candle. So it doesn't matter. I'll wait for the next one. What time is it? All right, we got some time. I'm going to see if I can get another trade. But this trade stopped out. It tried. It started out okay. It tried to do its thing, and it failed. You respect these orders. Now, what is very common is sometimes with these momentum trades, you get the first one stops out, and then a second one will appear soon after. See, the trade closed. So a second one will appear soon after. If I get that second one, typically that's like a failed high. I will try to short that again. But right now, there's nothing to do. I don't even have a warning here. So there's nothing to do. Now, in a situation like this, let me look around a bit. Let me go to counter trend. And in counter trend, on this time frame, there was nothing to do here, right? Now, with counter trend on, the trend is bullish here. So counter trend is the only way I'm going to get a second bearish trade. See, look, there's the warning. You notice how I changed the counter trend? If I go back into trend mode, the trend is bullish right now. I would not be getting this. Is that clear? Now, one thing that Steen is going to add in the next update is these orange candles will also paint an entire column. So you can see on the chart a column so you don't miss the candle. That's a nice little visual feature. So that's a pin bar, and I would still say we have bearish momentum. Let me go back to my hourly and just see what's going on here. Let me open up this hourly. What is going on? Is this like turning on me? Is this a higher low? This could be a higher low. I mean, this trend is generally bullish. This could be mixed. So I'm not at a major resistance. My major resistance is up here. So in theory, should I short it over here? It's a low probability location. Do you understand how I'm coming up with that? Look where I am, right? Like this location here is not exactly an attractive place to be shorting. I tried one, it failed. I'm going to try another one. I probably shouldn't. My idea for long at the minor support was obviously a better idea, but I missed that. So, this is very tricky. If I short this here, I'm asking for trouble. I'm letting you know in advance. I got 2 warnings. And if I take that, that's what I'm going into. So with that being said, this is what I'll do. I'll try one more short, but I'm not going to take an early entry. I'll wait for the signal this time, and I'll just try shorting 2 on the signal. Theory is so easy, but then the chart, right, well, the chart, look, the market is the market. The market's going to do what it's going to do. That's why we always have to accept that markets are random first, right? The market is random. But I need some sort of framework for my decisions. Why should I short? Why should I go long, right? So I need to be able to come up with an adequate argument. From my 1 hour chart, I know in advance that my higher probability levels are here, right? Not this one really, in here, right? These are my high probability levels. So those are going to be places where the trade is more likely to go my way. If I'm doing anything other than that, especially in a time of day like where we are right now, I'm asking for trouble. So I need to know that going into this in advance. So if I take this short trade that develops here right now, I know that I'm asking for trouble. So I can get out faster. Maybe I don't have to take the full risk. You see how it shapes my expectations. If I'm wrong, because this thing wants to continue higher, I know that this thing is more likely to be wrong. So again, my expectations are shaped. This is very important, and it's advanced. This is going to be hard for a beginner Because I'm showing you now, and it may make sense, but oh yeah, cool. But when you're faced with this situation, you're just going to react to what you see. Okay, instead of thinking in terms of the bigger picture, which all of this over here, all of this carries more weight than what we see here. Does that make sense? So right now, what I'm trying to do is I'm trying to see if maybe we get a short off of this little area here, but this is very minor, and I'm asking for trouble. So I'm being more conservative. I'm waiting for a signal. I'm not taking an early entry like I showed you earlier. Okay, and we'll see. Maybe this thing wants to work its way up to this level, but I'm not going to wait that long. I want to illustrate examples here. Now let's pull up this thing over here. Let's look at the. Oh wait, I may get a signal. I want to look at the here. I'm going to pop this up. Oh, I turned my book off. Okay, paper trade. Let's just take a quick look at how much. Oh, there's a signal. Hold on. I want to do the signal. We'll come back to this. All right, so I'm going to short 2 now. Let's let that candle advance. See how we have that little green attempt right there? Let's see where that goes. If that turns completely green and works its way to a higher high, then I won't go short. See? It's like that. I'm not shorting it. I'm being conservative. Oh, when we get the pin. Oh, there we go. All right. That I'm sure. Look how quick that changes. I shorted 2. So if that was green and that worked its way all the way up here, I was going to try to avoid that. But if we close red like this, then I'll give it a try. Here we are. So now I'm in. It's not the best price, but it's close enough to the entry. Let's see if bearish momentum follows through. Okay. Now, again, these are 1-minute bars. Things can change very quickly, right? The next candle may give me a sharp green candle. Like the next candle may do this. Okay. Like you always have to be prepared for that on a 1-minute chart. Someone I was looking at in the training channel yesterday, and one of my guys in there was talking about working on a 1-minute chart, and he was exhausted from it. And I wanted to tell him, yeah. And Steen actually gave him some suggestions. You shouldn't really be working on a 1 minute. 1 minutes are very hard to trade, very hard, because things change so fast and so much. And the mistake that he was making was he was reacting to this information on the 1 minute. If you're going to deal with a 1 minute, you have to be aware of the bigger picture at all times. You have to know where you are on the roadmap. If you don't, you're going to react to what you see on a 1 minute, and 1 minute blinds you to the context. 1 minute carries very little weight, right? Keep that in mind. Okay, so let's see what happens here. All right. Now keep in mind, I took that loss on the first one on 2 contracts. I shorted 2 contracts this time because I want to see if I can make that money back on paper. So far, so good. I'm going to open this up so we can concentrate on this. And then we'll look at the P&L here in a moment. So you following me so far? Now, here's one thing I may do. I may not give this a chance to get all the way to the take profit. I may take some off early, like maybe halfway, like maybe there. I'll take some off. Why? Because I want to lock in profit. Because I know I'm asking for trouble. I know that I'm going against this thing, structurally, and I'm not at a great level. So even though it tells me that the take profit is here, and this is what I should wait for, a lot of times, especially with a 1 minute time frame, I like to take money off the table early to lock it in. Sometimes what will happen is it'll pop back up to here and then give me another signal or another entry, meaning I'll use the same signal and I'll enter again. That's advanced. But what that allows me to do is I take profit on one. So I reduce risk. I lock in some green. It gives me a chance to put on another one again. So now if I win on those 2, now I win on 3. See? But I don't have to do that right now. I mean, if I could be super aggressive and add just another one here, but I'm not going to do that. I want to just let this trade do its thing. I'm trying to promote good habits here. Or if I show stuff that's too aggressive and it works, you're going to be like, oh, that's the way to do it. But I have a lot of experience, so that's why I hesitate to show those techniques, because it can get you into trouble if you're wrong. And I want you to win. I don't want you to get into trouble if you're using the TradeScanner Pro, even if it's on paper. Now, the trailing stop, I don't know where the trailing stop is. My trailing stop is on. Oh, there it is. See, it heard me. It said, oh yeah, I better pop out. So there's a trailing stop. See that? Took a little time for it to pop out. Now, that is probably one of the, besides counter trend mode, the trailing stop is probably the next most valuable feature. This thing just cut my risk by this much. Do you see that? People don't appreciate that. They're like, oh, who cares? It's still losing if it goes there. Yes, but I'm losing a lot less. I was originally going to lose all of this based on the market, right? That's the market risk. But now I'm only going to lose this if I'm wrong. I'm sorry, not that. I'm going to lose this if I'm wrong. So essentially, my risk is cut in half at this point. I know it's hard to appreciate because it's not profit, but over time, that's what puts you in the green. Now, I don't like this price action, but I'm going to give it a chance here. Again, it's a 1 minute. This candle can vanish in 2 seconds. Okay, this green candle, or it can go straight to the trailing stop, like it might do. I wanted to take profit there. I never took the profit, so whatever. Now I'm going to have to take a chance that the market goes to my trailing stop, and I may get stopped out, but I'm losing less. Okay, yeah, lad. I mean, that's a huge feature that people have a hard time appreciating because, you know, I'm not showing you $1 billion trade over here. This thing reduces your risk. You have to think about this over 1,000 trades, not one. So if over 1,000 trades, if my risk is cut in half, but I'm still reaching the take profit, do you realize if my risk is cut in half, but I'm still reaching 1.5 to 1 reward risk, that changes my reward risk to 3 to 1, because now I'm losing half of my original risk, right? So that's like the invisible profit factor that people just don't recognize because it's not in front of them. It's not hitting them over the head. It takes like some experience to recognize these things, to value these things. My experienced guys love this tool because they can appreciate the work, the immense work that it takes off their hands and how it improves their general reward risk over time. But a beginner has no clue the value of this tool, especially at this price. Okay, so I'm going to take one off the table here, like I said, because that was my plan. All right, so I'm going to buy one back. Right, I bought one back. I locked one in. Now I have some more flexibility. Right, I reduced my risk by one contract. As this candle closes, right, because the trailing stop moves based on the candle close. So this trailing stop is going to tighten my risk even further on this candle close. Eventually, the trailing stop is going to reach my entry price. Now, let me ask you, it moved a little bit there. Let me ask you guys a question. When my trailing stop reaches the entry price, what is the risk of my trade? Anyone want to answer that? When the trailing stop reaches my entry price, what is my risk? Lad, why don't you tell me? What is my risk? Lad, I hope to see you sign up on the free trial. What is my risk if the trailing stop reaches my entry? Anyone want to guess? You can also say, I don't know. But you guys should know. What is my risk on this trade when the trailing stop reaches my entry? It's 0, risk-free. Yes, you guys are correct. I'm going to answer that in a quick. I may have messed up the math. Hold on. But this, if my trailing stop reaches my entry, I have a risk-free trade. The risk is 0 at that point. Now, on top of that, remember, I locked one in. So even if I give back my trade, right, I give back the profit on this, and it goes to, my profit on this contract goes to 0, the trade is actually still green because I locked in one early, right? That's why I like to lock one in early in case it pulls that move on me, which it might do. Okay, so now the question is, how is it 3 to 1, not 2 to 1? 1.5 to 1 is cut in half. Well, so here, if my risk is typically, let me see if I could mention, if I can describe it this way. Let's say my risk here is 100. Okay, from my entry to my exit here, it's 100. Okay, but over time, it's cut to 50. Now, keep in mind, my risk is 100, right? My take profit is 150. Okay. if my risk is cut in half over time, so meaning my risk becomes 50, my take profit never changes. It only gets higher. It only goes higher, not lower. So 50, right, is my risk, but 150 is my profit. That's 3-1, is it not? 50, 100, 150. Is that not? So that's how it changes to 3-1 if you're cutting your risk by 50% over time, and your take profit stays the same, which is 1.5, right? It becomes 3-1. So that's huge. Again, over time, meaning over lots of trades, not 10 trades, not 20 trades, like we're talking like 1,000 trades. If your average risk is cut in half, now look, I mean, this trade here, the risk is more than cut in half at this point. I'm now, if I get stopped out, I mean, this is almost break even. It may stop out, but look at this. This is my risk right now. That's my risk right now on this contract, and it may go there. Okay, but I locked one in. We'll take a look at the P&L here in a moment, but that is really a key feature that is hard to appreciate with a tool like this. No other tool does stuff like this, right? And again, because this comes from all my years of experience. Well, all these other clowns out there, they develop these nonsense tools. They're just guys who know how to develop. They're developers who don't understand markets, and they produce these nonsense tools that look good and they look appealing, but there's no real concept. You know how many times I get emails from guys asking me to give them some advice? Like they're trying to code something, but it doesn't work, obviously. It's not making money, and they don't understand why, right? And it's a product that they want to sell. And it's because their concept is flawed. They don't understand markets. Anyone can make a program that draws things on charts. Look, my risk is now break even. I'm at break even. So this trade is risk-free. Let's see what happens. Yeah, right. It's like algebra. But you don't need to be like a math person to work this. Again, that's why the Trade Scanner Pro takes that off your hands. You don't have to worry about that. But I want you to appreciate that feature. That's a strong point, that a lot of these garbage tools out there, they do not do that for you. My goal, my overall goal, is to help you improve your performance and control your risk so that you can have a better experience in the markets and put your money to work effectively by simplifying the process, right? I want to help investors and traders have a better experience by simplifying the process. That's what this does. It doesn't overcomplicate. You don't have to sit there and interpret, well, maybe I should get out here. No, it's pretty clear. It's either here or here. Sure, if you want to be a little more advanced, right? But where do you put the trailing stop? You don't have to guess. It's right there. And there are times like this thing, now at this point, the random nature of the market now works in my favor, right? If the market randomly wants to go through here, it doesn't matter. It's up to the market now. It's not up to me, right? That's huge, because a common mistake is, again, people like to think, oh, well, I think it's going to go all the way over here because it's got a double top lower high, and it's got a fib this, and it's got an oscillator that, and the RSI says this, and I think it's going to go here. That's what I think. And I'm going to think that it's going to go here. Thinking is a mistake. You don't think. I'm not thinking right now. The market thinks. I listen. Okay. So my plan is laid out right in front of you here. I can exit here if I want. If it goes there, I have to exit here because I have to respect that. Or if it goes here, I have no business being in this thing at all. Okay. But at this point, my trailing stop is here. So there's nothing for me to think about. This is the random nature of the market in play. The market is going to go wherever it wants to go. It doesn't matter what I think, okay? I can sit here and analyze this nonsense all day. It doesn't matter. The market may go back to the support over here. The market may go here, right? There are countless scenarios, countless possibilities. But now it's up to the market. And the trailing stop is now plus. It's ahead of the entry, right? So this trade, I have no excuse for losing anything in this trade now. This trade is positive. I locked in one, and now I'm trying to ride the winner. If the winner rides and I'm able to capture more than 1.5 to 1, that's Now imagine, lad, like we were talking about cutting the risk in half. What if this trade goes to 2-1? If it goes 2-1 now, and my risk is typically cut in half, now that's a 4-1 trade over time. Okay? See how that works? So, yeah, that's how it works. So again, the random nature of the market is now working for me rather than confusing me. And I'm not thinking. All of that work is taken off my plate. Everything is laid out in front of you. You just sit and watch. Now, here's a question I got. This is good. I'm glad I see this. I'm going to wrap this up here in a minute. But see this? We're getting a warning over here. You see that? I had a question from a guy who said, you know, when you're in the middle of a trade and you get a warning, what is that? Is it invalidating the trade? What is that? What do I do? Well, here's the thing. This is a warning that the opposite signal may appear soon, possibly. You can either take that as a warning and get out. I would not flip the trade because you're just trying to get out of your trade here. The warning doesn't guarantee that the opposite signal will appear. So don't let that confuse you. The reason why the warning is appearing there is because the trend is now bearish, okay? And I'm still in counter trend mode, I think, right? Am I in counter trend mode? Yes. So it's showing me the counter trend move. And look, it's trying. You see that? Now it went basically to the take profit. I'm being a little more aggressive here, and I'm saying, well, I have a choice. I can get out if it I could have gotten out there. I tried to give it more of a chance. Now this is it here. So maybe we go to the trailing stop and that closes my trade. So it's up to the market. I can get out now if I want and just take whatever I got. I can do that too. So those are my choices. But you see, I don't have countless choices. I really only have 3, right? It's exit here, which is not an option right now. It's exit now or exit here. And the trailing stop is going to continue to follow this thing. So let it ride. That's what I'm going to do. I'm going to let it ride. 3 options, and only 2 of them are possible right now. Maybe my third option will become a possibility again soon. Oh, look at that. Remember, these are 1-minute bars. Now realize, previously, when I see candles like a pin bar and an aggressive green candle like that, or even this aggressive green candle, that's going to get me to react. Oh, this thing's reversing. I better get out. You're going to react to what you see. The Trade Scanner Pro minimizes that. As you can see, I'm not reacting. I keep telling you, I'm going to let the market tap me out. So here's my third option. I can get out here if I want to right now, or I can be more aggressive and let it go to the trailing stop and let the market tap me out whenever that's tapped. That could turn into a much greater than 1.5 to 1 reward risk. My trailing stop just moved again. Okay, so you see that? So again, if you'd like to sign up for this, I'm just going to show you the website. Again, the link is in the description. The link is on the screen here. It takes you to this page, right? My Trade Scanner Pro website, Market Signals Pro, tells you how it is, explains it, takes you to this. You can register for 14 days, and it's free for 14 days. Cancel anytime, but make sure you cancel before day 15 if you don't want it, because if it bills you, don't come looking for me and saying, oh, I want my money back. You have to be responsible. You have 14 days to cancel it. It's plenty of time. All right, this thing is giving me a hard time, and plus I want to get out of this. I want to finish the stream up too, so I'm going to get out. Okay, I gave this thing a chance. I'm out. I'm not going to wait for the trailing stop, but we'll watch it as I talk. Okay, so one thing that prompted me there was we had this first test, right? We had the first test. It attempted to break lower, and now it's hesitating again. I don't want to see that. This thing, if this momentum is going to continue, it should continue after the red candle. I shouldn't see a green inside bar develop, and I shouldn't see that. Okay, so I got out. And now it's probably going to go to the trailing stop. Maybe not. Who knows? It's random. I'm not thinking here, right? That's the key point. Who knows? Eventually, the trailing stop will be touched. When it's touched is up to the market. And that's what you respect it and you get out. So let's take a quick look here. Let me go to my paper trade thing here. And let's just take a look at what happened. So this trade here earlier, see this one here that I'm pointing to? This was minus $71 and this was minus $75. Okay, those are the 2 contracts I took in earlier and I got stopped out on. So here, I made $59.68. So and then I never made back, right? You can basically consider this break even, right? I never made back the full amount there, but it was break even. And again, this is a bad time of day, and this is a tough area, right, to be taking trades. Perhaps if I held this longer, I could have made that money back, but it was, as you could see, it was close. The first trade that I took was over here in this area. Remember, I shorted this. I shorted one early, and then I shorted one on the signal, and I got stopped out. It went up here. It gave me these two warnings. There was no early entry. I waited, right? I was more conservative. No early entry. I waited for the signal. If I had an early entry, or if I had 3 contracts, obviously I would have made the money back. But so we consider this break even. Now, again, I'm not going to sit here and wait for the trailing stop, but perhaps this thing breaks this little minor support here, and that would have paid back that original losing trade. So that's a real time example. That's reality. Sure, this is on paper, but as you can see, this trade signal is real time. This could have been real. And that's what I want to illustrate. Like, I want to show you what to expect. So you should, by watching a video like this, you should have a better idea of how the TradeScanner Pro works and how I went into this trade, because you don't just take random signals. You cannot do that. You have to use some form of context. I mean, now look where we are. The trade just closed. You see that? So I got out basically at a slightly better price manually, voluntarily. But look what's happening here in the bigger picture. Nothing. There's nothing happening here. Do you realize that that trade that I took, which was what was it? It was this trade right here. I took this trade right here. See that? That trade was right at the tail, right at the top tail of that 1 hour candle. Do you realize that? You won't be able to see those type of trades, especially looking at the 1 hour. Nothing's going on over here. But I just took a trade that happened to work in a bad area. This is a bad area. All right. So like I said, when I tell people, never feel like there's a fear of missing out. There are numerous opportunities. There are going to be opportunities back at this level, especially on smaller time frames, back at this level, right? And short opportunities at this level. I don't know how far they'll go, but there is a high probability that you can get something out of them, especially on smaller time frames. All right, I've been talking for a while. Any questions? Cool. Any questions? Yeah, I want you guys to be able to use this. This is one of the few tools that has the potential to at least cover its expense. Like I said before, Netflix will never be able to do that for you. Cancel Netflix, make some money, and then get Netflix again. And you can watch your documentaries. This thing can potentially pay for its cost. $30 a month is not a hard amount to cover. Of course, to play this game, to make significant money, you have to have a significant account to begin with. You're not going to get anywhere with a $100 account. I just have to mention that. Okay, cool. So, all right, guys. So again, if you're new, you could just click on the link there. That'll take you to all that. I hope to see some people signing up. Take advantage. And again, one thing I want to mention: if you want to reach out to me, if you have any questions, you can reach out to me on TradingView. I'm pretty quick to answer on there. Discord community, you could send me a message, or you could send me an email at mark@markpmarkets.com. I'm happy to answer. If you get a message from me first asking you for money or trying to send you to some website other than Market Signals Pro, then it's probably not me. I don't initiate these type of conversations, and I don't ask you for money privately. I don't do that. Please don't be fooled. It makes me sad when people tell me that someone robbed them, that it was pretending to be me, all right? Because, they try to take advantage of my good reputation. Please don't be fooled. Report the person, block the person. It's not me. Just wanted to make that clear. By the way, I bought yearly and it paid its money within 2 trades. Just don't play with it on lower time frame. Ken, that's a very good statement there. Don't play with it on smaller time frames, right? So for a beginner, like I illustrate 1 minute time frames because I want you guys to see action. But in reality, I suggest larger time frames. They're easier to deal with, first of all, but everything that I showed you here would apply. If you're working on 15-minute instead of an hourly, you can look at a 4-hour. You could look at an hourly too, but a 4-hour may give you some more perspective. Or you could look at a daily chart. if you're on a 4-hour, for example. You always want to look at a larger time frame to get context for your smaller time frame, and then you use a TradeScanner Pro to confirm what you are anticipating, but the plan is formed from your bigger picture like I illustrated here. Okay, cool. Ken, thank you for sharing that. All right, you guys. So again, thank you for watching. If you have any questions, you know where to find me. Enjoy the rest of your day, the rest of your evening, wherever you are in the world, and thank you very much. Thank you very much for watching.